mode.
Traders, what's happening? Jamie Saettele here. It is 1 p.m. New York City. And welcome to the Midweek Strategy webinar with SB Trade Desk. And just one second here. We gotta change the name. SB. Let me know that you can hear and see. Pooja, what's going on? How are you? I hear that the AV is good. Awesome. All right, so do you remember this chart from back in June, the June report, special report on the dollar? Haven't really gone anywhere in the dollar since then, but I want to highlight or remind you of the divergence that you will see at turning points in the US dollar and the euro in particular, because again, the euro makes up 57% of this index. What you've got here, right, was the euro low back in March 2015. Euro, if you remember last December, ECB, the euro did not make a new low below the March 2015 low. All right. The dollar, the ICE dollar index, poked to a new high barely, right? That's a dynamic that we've seen at turns where euro is called non-confirmation. You can call it divergence, but really it's non-confirmation where they're both not confirming each other. It's like Dow theory with the transports and the industrials in the stock market. Which brings us to now, because this, like all technical analysis, okay, concepts and logic, it's the logic is fractal, meaning, it's applicable on really any time frame. Okay, so consider this on the daily chart, and actually what's just happened here in just the last several days. All right, this is the ICE dollar index on a daily closing basis. Okay, and you have just, yesterday, a new close high. Closing prices, prefer to look at those when you're looking at things like, divergence or potential divergence or non-confirmations or whatever. You have a new high, basically, since August in the dollar index. Okay. So, you've got moved through the September highs in the dollar and the late August highs in the dollar. Let's go to the euro, and, those same levels on the euro are here, right? And here. The euro, by contrast, is actually holding up quite well, right? And again, closing basis, okay? We are not, we did not finish down at the lows. We are not at a new, post August low in the euro, right? Quite the opposite. So that has me wondering if, lo and behold, there is finally a big shocker of a move coming in the euro, right? That article that I put out, or that I referenced, I should say, in one of the recent swing updates, it was not yesterday's, but 2 days ago, right? When you read the news, this is the kind of stuff that you really want to pay attention to here. Euro dollar, here we go. Okay, these are the types of articles that will show up right before the market makes one big hell of a move. Okay, basically the media is acknowledging or noticing that currencies are kind of in trading hell for the most part, right? And everyone's kind of like, well, screw this market. There's no more moves. This thing, not going anywhere. Well, once you reach this feeling, right, or this emotion, that is right when you've hit rock bottom, Okay. In other words, volatility has hit in the FX market, right? The lack of movement has hit kind of like rock bottom. It's hit its own peak as far as lack of movement's concerned. So the article itself is an interesting read, but simply the headline, okay, is what will kind of alert you to these types of things, right? So it's an interesting take, and does suggest to me that you will see some sort of a shocker of a breakout. And look, after yesterday's action, let's kind of move, back into the price chart of euro. Look, we continue. Eileen, how are you? Hey, welcome. We continue to hold this raised floor here, and look, 200-day average is down here as well. So, irrespective of whatever news and everything, the market continues to bottom down at this region. Okay, so to me, it's kind of a perfect recipe for a surprise move higher. And let's just consider that if you maybe were long after the last day of September's trade, right? And you thought you got a real good entry down here. Then it comes back yesterday, stops you out, you capitulate. Well, this thing's going lower now, comes right back, right? So you kind of that was kind of the screwy stop run right there, right? That I think will presage a bigger move higher. Amir asking about yen. You got it, my friend. We will definitely look at pound yen. So, certainly not out of the woods here on euro, obviously, but man, we're getting close. I think we're really close. Obviously, NFP is coming up on Friday. Look, maybe that's the impetus that we need for a move higher. We'll see. I like the upside, so long as we hold this, kind of the floor down here. So, like that the euro prospects at least. All right, let's move on. Amir asking about pound yen. I'll just run through some of the majors real quickly. So as you know, we have broken down in the British pound. Look, here's a kind of a secret, if you will. Eileen saying since pound yen has pound dollars turned. Well, I don't know about that. I mean, it's up 27 pips here. I do think you certainly get a bounce here. As I put out this morning, we came in this morning, we were trading right down here, right? And this is quite clearly the slope, I believe, that you're going to want to follow. We've rebounded off of it. So if nothing else, be open to trading these slope lines. Now, the real setup here, Eileen and everybody else, is really to sell a rally into one of these resistance levels, and there's two of them to pay attention to. 28.57 is the most recent high volume level. If I mosey on over to the volume chart, you'll see that right here. Okay, so on your chart, you can put that as the basically 4 a.m. bar on the 3rd of October, which was on Monday. Okay, so that's below it's on a spot basis. Currency spot basis, that's 128.56, okay, which is pretty much in line with the former lows. So that area is your level to know for resistance, in my opinion. Now, here's the thing, and I wrote this yesterday. It's quite dangerous, or more dangerous, in my opinion, to put out orders, say standing limit or stop orders, on pound dollar right now, because look, we all know that this move, right, is predicated on kind of the Brexit worsening, right? And as you know, I'm not a fundamental guy, okay, but I do understand how different markets move in different environments. And in the case of the British pound, I can tell you that rumor-driven moves are subject to very quick spike type of moves. So I would not be at all surprised to see a headline on Brexit or lack of Brexit or whatever you want to call it, send pound, kind of cascading to the upside through stops and into either 28.56 or even back towards 29.14, which is your month opening price, okay, and also the former lows from back on the 23rd of September. All right, would not be at all surprised to see that. All right. Again, in order to get long this for a major reversal, you would have to see strength up through this line. That's what we were waiting for the entire time, including last Friday, which never materialized. Okay, so as I sit here and I look at the British pound, you know, I will trade the British pound as it's crashing into supports like this morning. It's not a thing I can put out as a swing trade because, let's be honest, these are quick moves and there's no telling how long that they last. Okay. Also, if we get a rally, as I just described, on a rumor or something, and it's, you know, clearly a spike, a liquidity-driven event, I'd be willing to fade it up at 29.14, more so than 29 or 28.57 at least. Okay, so that's what my take is on the British pound. Amir and everyone else, I will get to pound yen in just a bit. Just give me a moment here to go through some of the other majors. Dollar yen. The triangle, or I should say the support, is certainly holding up quite well. Remember, long-term support. Remember, daily reversal support has nailed that low, and we have moved higher. This is the 7th day up. Again, you're probably going to get a pullback or at least a pause. At least that's what's suggested by you know, by the 7-day up or 6-day up yesterday even phenomenon. And if let's throw that up there actually. Let's look at, so 7 days up. We're probably going to finish up today, barring a 60 pip reversal. Okay, so we're looking at the last 3.5 years or so here. Okay, 7 days up, 7 days up, 7 days up. Let's say even if we are in the midst of a broader uptrend, okay, you know, even if we are at a situation like this, we're still going to get a period of sideways before we can go higher. And in that sense, I do think that your big supports to watch for probably going to be something along the order of this line right here. Okay, this is on a daily chart. You know, next few days, you're probably talking 102.40, 102.50. If you go to the shorter term chart, you know, one of my favorite setups always has been one of the best setups is simply to put up the former corrective channel. In other words, what the channel would look like here. Okay, and watch that for support. Okay, and it was resistance for a small while here, and then you get the breakout. So watch that level for your first, you know, your first support. And it does intersect with the former high over here around 102.80. Okay, so that's your first area. That's like your, you know, that's an area to scalp. If you were to get a quick drop here, you would be looking for this market to hold to get a quick bounce off of it. Okay, you could trade along this level for a while, but that's really the first area to really pay attention to as far as a support, you know, region for dollar yen is concerned. 103.91 is going to be resistance in my opinion. You know, maybe 104, but 103.91 is the next daily reversal area. Okay, again, here it is. This is the high day for the move, and the close of that bar is 103.91. There's a new proposed median line, if you will, which actually touches BOJ day here. Okay, back on 9/21. 104 is basically where we are today. 104.10 is pretty much where we are tomorrow. So that region for a pullback, and then would be looking for support probably starting at 102.80, but down to 102.40, 102.50. Okay, moving along, Aussie. Aussie's one that I do still, kind of lean towards really the bull side. Um, Continue to focus on the 75-70 region. Okay, I think Aussie's ultimately a buy the dip kind of deal. I know that we were coming off of this really long-term resistance level. Eventually, that's going to break, and it will probably be a violent break. Given how many times it's been tested over the last several years, that level will give way. All right. In the very short term interim, you probably do want to trade range, and here's why. If we take a look at Aussie, so this is one of those analogs that we've been following for a bit, right? Going all the way back to 2001. And here's the weekly chart of it. Again, the magnitude certainly not always the same, but the timing, especially recently, has been really spot on. And if we look at the daily, even go down to the daily, we can see just how clean it is. Okay, so here's the closing prices. You can see here, this basically suggests that you trade, in a range, a decent range, up until maybe the last week or so of October before you really start to maybe get a trend on the upside. Okay, in in Aussie dollar. So if we're taking this as kind of our overview, that to me would favor a range trading type of scenario with the Australian dollar. And here's your short-term channel, intersecting some slope lines that cross through recent support and recent resistance levels. 75.70, okay, again, former highs mid-September. Two equal legs down from 77.09 would get you 75.75. You're right there. 75.75 is also the 50% retracement of the rally from mid-September. So there's a lot going on around that 75.70 region, okay, that can get you a bounce. At the same time, if you get down, let's say that we trade 75.70, well, if you trade back towards the highs, you might actually end up failing again, right? So 75.70, maybe back up here, fail again, and then sideways up until this point in October. And look, if we think about this with the metals, there's a question here from Can Wall. How are you, Can Wall? About silver. And if we look at the metals with how some of these higher yielding currencies are trading, certainly that fits as silver. Here's your silver price. Silver, it looks like the big support for silver is probably down near 17.10 or so. You've got the 200-day average, the lower parallel, okay, and the Brexit day low, okay, is all around 17.10. It's 17.07, but 17.10 rounded up, whatever. Okay, so that's an area to really watch for. So if we can get maybe a little bit of back and forth with the metals as we try to bottom in this region, okay, for silver, which is again still a very extremely clean chart, then I think we're probably could see something along the lines of a range in Aussie, lower, higher, lower, as silver and the metals try to carve out a low for themselves. Okay. Copper, obviously similar. Copper's broke out, failed at resistance, or just above resistance, I should say, on a long-term basis. Again, copper, you're going to want to watch the support levels here, 200-day average, along with the low back here on 919. Okay. Same idea as Aussie, really, is that you're trying to put in higher floors, higher floors, higher floors. So pay attention to that copper chart and that silver chart especially. I will get to crude Canwall when I start to take a look at the dollar CAD. Okay. Moving along from copper, we were just looking at Aussie. Let's move to Kiwi. If you recall, we had weekly divergence up at the highs, right? Way back on 9/7. We have failed and turned lower. It's been, quite a difficult trade to hold on to. We've been short twice and stopped out twice. We're bouncing here. Okay, you can see if I just go off to a daily, you can probably see it a little cleaner. We're going to do this here. All right, go to the daily chart. Here's the level. Oops. Here's the level that we've come into today. 25% line. That's right where we are. Okay. Right here. Okay, now to me, Kiwi's still a sell. All right. Kiwi's a sell down until at least 70.20 or so. As I kind of noted last night, you get down into this region next week, I think on the 11th, which I guess would be Tuesday. And I still like the entry kind of being, at the 20. So 72.20 is for the entry. Okay. Essentially that's the underside of the head and shoulders, right? Kind of be this line right here. So we have come into support a level that you could bounce from. This was the low back in July. Okay, that line, the market stopped at a level where it's not random here. Okay, at least according to this. So I would be looking for, maybe a bounce here, but I think the opportunity would be on the downside still until about 70.20. Okay. So Kiwi, I still like it to the downside. Talked about yesterday with the 4-day high, if you recall, and the 20-day low, right? Canwall, I will get to crude right after Kiwi, actually. We'll get there right after this. So here's the 4-day high and at least a 20-day low and a down day. Again, remember I said it hadn't happened since 2007, and the only time was way back when, right here ago, right? Well, look what happened. Kiwi crashed after that. Obviously, we have a different dynamic here, but not saying it can't happen. Okay. The time before that, you got to go all the way back to 2000, January 2000. And sure enough, the next day was a big crash kind of, day. And then the market kind of did nothing and sucked for a long time. All right. But, still a bear on Kiwi. Okay. Moving on. Canwall, we can now get to dollar CAD and crude oil for you. So crude, is this thing topping or what? 200-day average here. I like the response on the median line. The short-term picture, I'm following this for the short term. Okay. Essentially, we're just looking at a trend line off the highs. All right. Now, I get it. This decline is not necessarily, an impulse. Again, though, look at the hourly close. If you look at the hourly close, this could be 1. This could be 2. You could be in a third wave lower here. All right. So while I'm bearish Kiwi dollar, I'm also bearish dollar CAD. Okay. And we're going to look at crude oil here. But after that, I'm going to show you something that's fairly wild from a very macro type of intermarket relation standpoint. Okay. Now this slope is a good one to follow in the short term. You can see how we've come off, and look how we just bounced from this, downward sloping parallel. So we could be in this slope for a bit. This is what I would trade off of. Short-term trend line. You might actually get resistance again at 32.13. All right. So I think that dollar CAD might be trying to roll over for a bigger move to the downside, and I will follow closely the short-term picture here for clues that indeed that we are rolling over. All right, let's take a look at crude oil. So crude oil, we put up a chart here. This was a couple weeks ago, or it might have been last week. We had this chart of crude, and the operable slope that we're working with here is the trend line from February and in August. Okay, and if you recall, we did turn up right around that line in September. Okay, so what we've done is basically extended a parallel from the high here. Okay, and this is the high in 9.8. Okay, so what you're seeing here, what you're getting here is this. We are testing some resistance. So, Can Wall says, I'm long crude around 49.26, placing should I place stop around break even? Well, I'll tell you what I would do. Yeah, I would, because look, if you trade down to this region, I think you get down to 48.97. We're still riding the median line here quite well. Okay. We're still riding this level, and I'd be looking for support, down back at the median line. All right. Now, this is a bigger resistance level, however. Okay. So something that I'd be aware of, Can Wall, is that if you start to pull off here and you come through the median line, we might be making a visit to you can see the 25% line, right? Because again, the 75% line is really the one that's been resistance on the way up here. This is a steep slope, but if you're finding a resistance at the 75, a lot of times you'll find support at the 25. Okay, and vice versa. So, look at the former high, 48.97. If you can get a little consolidation here, it's probably good and healthy for it. But, from my standpoint, long crude into this resistance might not be the best idea. Okay. Risk of a pullback here, or at least a pause and, some consolidation that takes several days, probably in order. In fact, I'm interested to see what how many days crude's rallied. What do we got here? Crude is up. Oh, was yesterday really an up day? Open, close. It was 1, 2, 3, 4, 5. 1, 2, 3. I think it's 6 days up. So, oh no, it's not counting it as 6 days up because it's comparing close to close. Okay, so in any case, if you were to have 6 days up, you can see that would be pretty rare. In fact, it would suggest that you are going to pull back. Either way, Can Wall, I would be looking for a pullback in crude oil at this point. Given the chart I just showed you, right? So, work with the trend line from the February and August lows. All right. And, there's another way to look at this. I talk about it, say it all the time, but, what is really pitchforks? It's a trend line method, slopes, right? So, what are you really trying to do with those tools, right? You're not doing it because the pitchfork's a pitchfork. You're doing it because you're looking for the angle that the market's trading on. So in this case, certainly speculative, right? But an interesting exercise nonetheless. If you were to draw this fork like so, okay, but adjust it so it's simply a trend line, it actually works out really quite well, does it not? The high would actually touch this median line, right? So this median line, you could be trading on these parallels for quite a period of time. All right. So if you look at it in this way, really, right, here's where you are now. You're at resistance here. I would be putting this on support here. That's your 25 line here, okay? Which really hasn't done anything, so I'm not even going to keep it. So 60-minute chart, same stuff, same lines. And this really could be kind of the moneymaker, if you will, okay? Oftentimes you'll notice that kind of the broader you look at it, in other words, do your analysis on this, this chart, this daily chart, and then go down to the hourly, and sometimes it just gets so clean and clear, right? So this might be kind of your spot, right? Resistance, guess where we found support and took off from, really, like really where the rally really got started, right? So, Anwal, you're doing the right thing, or Canwal, you're doing the right thing as far, in my opinion, as far as looking to buy supports to prepare for a breakout to the upside. However, be aware that you are trading around kind of a risky area at this point, and that, any dip from here should certainly be bought. You are in an uptrend, and that big time, the best levels of support really are your combination of horizontal levels and slope levels. Okay, and in this case, the slope level intersects a big horizontal level being a former high, 47.70, some point next week. All right, so that might be kind of the area, to to get long. Okay. All right, so I'm going to go on from there. I'm going to get rid of this stuff because hold on here. So I said I was going to show you something kind of wild on the macroeconomic kind of the macroeconomic landscape. So as I like Kiwi dollar lower. I also like dollar CAD lower, right? Just when I look at both of those charts, it kind of suggests to me that both could be headed lower. So it makes sense, I think, to kind of look at Kiwi CAD, and we've done this before. But again, what are the two drivers between for these markets? Here we go. The two big drivers are going to be milk and let's see, milk and crude oil. So if we would look at milk prices, so dairy prices, as you know, with New Zealand, right, being how important as they are. So we're going to look at futures, DK, okay, divided by CL1. So this is milk divided by crude oil. This is the ratio. If this thing ever comes up. Not sure what's taking so long. Loading data. Must have some sort of a slow computer right here. I don't know what's going on. Let's see here. Let's try this again. DK1 divided by CL1. Well, it's not loading. So anyway, it's kind of frustrating. But if I were able to get this thing moving and show you what it is, it's simply a chart of milk divided by crude oil. All right, and what you've got is a ratio that's turned over, rolled over, and basically Kiwi Cad will tend to follow it at certain times, and we've got that set up right now. So again, apologize, it's not, for whatever reason, the software is not working. But if we look at just the chart of Kiwi Cad itself, we can see a pretty solid, topping prospects, right? So looking at Kiwi dollar and looking at Kiwi Cad, in conjunction with each other and in conjunction with their macroeconomic forces, I don't think, is the wrong thing to do, right? Here's the weekly chart of Kiwi Cad. Big weekly reversal, right? That market has rolled over this week. All right, so you've got resistance probably at 95, 35. So to me, this does tell me that being short Kiwi and being short Cad or dollar Cad is on, at least on the right track. Okay. Moving on from there, Eileen asking, are metals then correlated with Aussie like oils with Cad? Well, at times, I'll tell you what, a lot of people will talk about gold and Aussie dollar. That's not necessarily the right relationship to look at. The better relationship to look at, Eileen, is really copper and the Australian dollar. So if we were to pull up a chart here of copper, so here's copper, okay? Let's go on a weekly basis, all right? Weekly close basis, if I put in Australian dollar futures, oh, we just go spot. You can see, for the most part, that they are, they do move together, okay? Not all the time. In fact, the times that they don't move together are the times when you get the most information. It's like the dollar index and euro to an extent, when you have a divergence or a non-confirmation. Okay. Now, in the case with copper right now and Aussie, they both have been basing, right? We have not seen one break out and one, hold lower. You have seen Aussie close higher on a weekly basis above its August high, and copper's languishing. That to me tells us that it's not ready to go yet. All right, which again is also another reason why we might be going sideways for another 3 weeks. So don't worry too much about selling Aussie at resistance. You want to play the ranges in Aussie dollar up until we get to the breakout point, which again might be in 3 weeks. So this is something to look at with copper and Australian dollar. The other thing to look at, and again, I don't know if this charting package is going to work right here, but I've done this on occasion. Sometimes you get, so if I go to gold here, okay, let's go to a daily chart. If I go to gold, you remember, we might find an interesting discovery right now, actually. So if you remember, we look back from about 12.15, which was the low close in gold. There will be times when gold will lead the Australian dollar. Okay. So remember that date 12.17. Well, 115 was actually the low in Australian dollar. So what we're doing then is we're putting the gold chart, which is right here in blue. Should probably make it gold so that it makes sense. It's kind of an ugly color, but whatever. And there was a while where we actually were, very much gold was leading the Australian dollar by 1 month. Okay. That has not been the case for a while. This will eventually come back into focus because it almost always does, right? Now, it hasn't done that for a while. So, like, we had this huge dump in gold. Okay. There's a period coming up where we get to support, say, at 1257 in gold. And here's gold. Okay. 200-day average, median line. Okay. 1257. Probably going to see support around here. All right. Would be my guess. And then you could actually see a pretty good rally, if not retrace the whole thing. So what that tells me, if the Australian dollar is going to come back into this lagging gold by 1 month deal, you probably get it with a move down in the Australian dollar on risk aversion and a move higher in gold on risk aversion. Okay, so once we see that happen, or once once we get that move, whenever it may happen, it might be in a couple weeks, then I will know, or we will know, that we are probably following gold again on a 1 month lag in the Australian dollar. Until that point, this analog, this relationship is relatively unclear. Okay. But this is also another way to look at it. So it might not be that they are correlating directly. It might actually be that one's lagging the other. And remember that date. Okay, 117 for gold and 1217 for gold, 2015, and then match that with 115 in the Australian dollar. And at times it will come back into focus at some point. Okay. Let's take a look. We've looked at crude. We've looked at all kinds of stuff here. Let's take a look at. We'll go back into the S&P. Here's the S&P 500. So I'm wondering if what we're going to get here. We've essentially, the ranges have been increasing in kind of intraday. Like, you can feel that the market's getting a little more movement. But I'm not so convinced that the next move is down at this point, because it's really been so slow in its development. We're getting a good move here in euro on the upside, 112.20. It would be nice if we could get a breakout into before NFP and just go north, straight north for a while, wouldn't it? But I'm wondering if the move from February is a diagonal. In other words, for those of you that are familiar with Elliott, perhaps we go 1, 2, 3. Perhaps we're overlapping in a fourth wave triangle of sorts, and then we're going to pop higher for the fifth. That's just a possibility. At this point, I don't think there's a whole lot of money to be made trading the S&Ps. We continue to hold the supports. I mean, it's pretty wild if you think about it, how well these supports have held, right? I mean, we've been looking at these lines for a while. We even were able to get resistance here at the very end of September, 9:30. That was the last bar of 4-hour bar of the year, or sorry, of the month in September. We sold off right away, hit support right away. So look, if you're following this, resistance looks like 2170. And just trade the next bar. I don't see, there's not a whole lot to glean from this information as far as the next big move is concerned. on the S&P. I will say that the emerging market currencies are the ones that, specifically the dollar South African rand, right? The dollar rand's probably the one that is the best to follow in terms of, um, risk on, risk off right now. Like you get a lot of people talking about yen crosses still. It's not nearly as much yen as it is, the dollar rand. Dollar mex a little less so because you have the whole Trump story going on with that. Dollar mex or the Mexican peso is probably the buy of the freaking century right now. So I mean that means short dollar mex. I'm talking on a really long-term basis here, but here's that dollar rand chart. Again, the special report, I'm very bearish on dollar rand. I do think that the rand's going to end up strengthening significantly in the coming year or so. But remember, we were looking for and are looking for really, a top up on here on resistance. So, this chart, if I'm correct or on the right path, that you're going to get a C wave higher or something, or at least test these highs, then I would think that a rally up here is accompanied by stock market weakness because that would be your real risk aversion. Okay. But just keep an eye on Rand. I kind of check it a couple times a week just to see what we're doing. Once we turned up here with this little mini double bottom, I figured wave C was up, was higher, has yet to be borne out. Dollar Knox, another one. Again, this is going to be a sell up at resistance. I can't stress this enough. Watch your 20-day average. Okay. In trends, the 20-day average in dollar knock is going to be resistance. Okay. When you get good moves, it is resistance. Okay. As it is right now, over the next couple of days, dollar knock and the 20-day average, you do get an intersection around the median line, okay, of this entire channel. So if you're thinking maybe 815, 814, gets you down to 770 on a target, you can get pretty good reward to risk on dollar knock on a move, fade a rally up into resistance. Okay. Liking the dollar knock move. Other than that, pound yen, I told Amir I was going to look at pound yen. Pound yen, sneaky bull, it seems. I'm not going to show the monthly chart going all the way back because we've shown it so many times, but looking like, actually this is resistance right here. All this is a trend line that goes back, Amir, from, this is an hourly chart, by the way, but we're looking at a trend line, okay, back to the September high. All right. And you're coming into resistance right now on pound yen. I would be watching for support. First of all, I would expect to see a pullback right here, okay? I would expect to see a pullback right here, 132.15, right? Just 132 and change, more or less where we've topped out. Would expect to see support down, near this, kind of highlight it. You can really see, the resistance that you overcame here, basically looking for former resistance, resistance, to provide support. Okay, so 130, 120, 130, 135, that would be support for me in pound yen. I do think you're trying to base for a bigger move higher in pound yen. Again, that's based on the fact that you've traded higher from a trend line that goes all the way back to 2011, right? So we're coming off of really big support. I think we're trying to base for a bigger move here to the top side. Okay, that's what I'm feeling. But just looking at this chart right now, immediate risk does look like it's lower from, 132 and change. Okay, top of the range. recent range, okay, but you also are having a trend line that extends back to September. It's really the September trend line, okay, and again, eventually you're going to break higher. I mean, look at how the lower parallel on this structure ended up providing resistance and was beautiful support down towards the lows just earlier this week on Monday. Okay, to me, this is this is a formation. Really, it's kind of a bottom, that forms when you start to see former resistance provide support. Okay, get back, touch that resistance, pull back, find a higher support, then break through. It's all a process. So I hope, Amir, that helps with pound yen. And that, my friends, is pretty much all I've got to add right now. Um, is there anything else that I could look at or potentially answer? Any questions? I would love to address any questions that you guys may have, whether it's market related or even, tactical related, trading related, what have you. Going once, going twice. Sold. Nothing. All right. Well, with that, I am going to wrap it up. We've got NFP coming up. Not sure about tomorrow, but you know what? Be on your toes. The little rumor that circulated yesterday about Draghi talking about tapering, it's something like that no one sees coming that's going to drive the next breakout, right? I mean, that's really the next big risk in the market. Everyone talks about, well, this happens, well, no one really knows what the next big thing is. All we can do is rely on the charts to show us, where the demand and support is. Clearly, there's a lot of demand for the euro down here because every time it gets to this line, it bounces immediately, right? I mean, you name it, FOMC, whatever. Brexit, Deutsche Bank, Italian banks, doesn't matter. The euro, for whatever reason, won't go down. Steve asking about euro yen. Let's take a look. So euro yen, daily chart. Here we go. All right. Euro yen has broken through the 115 region, was an area that we were looking at as resistance. Broke through, so it's higher, getting up into resistance. Daily reversal level, it's 1665. You could get a 1665 pullback, especially considering that you do have this trend line, okay, over the next several days. So 1665 is, an area for kind of a dip, in my opinion. But I'd be watching for support as well. And there's actually a really good horizontal level to watch for support, Steve. Just draw your line here, right? Resistance, support, resistance, okay? Cuts all through there. 1480 area for support. So 1480 support, I could call it 1680 resistance, okay? Ultimately, though, probably basing for a broader upside break. Essentially, you've got this trend line, which, again, is the top side of it is in line with a good horizontal level at 1480, an area that I'd be looking for support, okay? Let's see where the averages are on this. 20-day, 55-day are a little lower. Break through the 20 days a good indication, though. So, last kind of comment on euro yen is risk of a pullback from, about 1680 or so, but 1480 is where you want to buy it, I think, for a move higher. Turning to Euro Kiwi, which was a question I just had from D. Sure thing. Euro Kiwi headed higher. Again, we think about the legs of this. We've got what? Kiwi dollar bearish, euro dollar bullish. okay? We're looking higher. In fact, you completed kind of a very complex head and shoulders bottoming pattern here with yesterday's wild move to the top side. Euro Kiwi, it's essentially trading in a channel, okay? If you just draw the trend line here back to January, this is kind of the channel of the year. 2016 channel extends off the lows, okay? Look higher, probably towards 164 or so. You can even see here that we're kind of testing it now if you go off this. I mean, really, your risk on this position is 153, okay? And you're looking higher, probably towards 164 or so. Again, would prefer to trade it through Kiwi dollar and Euro dollar separately, right? I'm actually long Euro right now, short Kiwi. D asking, say, you're golden, 53.50, you're long at 53.50. All right, well, that's your risk down here. You should be golden. First resistance, because you've got the horizontal levels here, low from December of last year, high from July of this year is 58.20. But look, I think you've probably got legs for 64.50 on this thing. Okay, in fact, let's see what a fork would look like. I haven't drawn in a bullish fork on here. Okay, look at that. Boom. Higher floor. I would just follow this fork. I mean, you want to make sure that you don't get stopped out for no reason. So keep this thing. I would keep it at, the stop under 153. Okay. But this thing's golden for a move. Again, I think it's going to 164. But this might be your this is actually a really good fork to kind of teach on. So, all right, you draw this fork. This is probably too early to really trade on this, but there's a few. You don't even need the fork. You can just draw the trend line. Okay, so let's say we have this trend line and we have a trend channel, right? Okay, so here's the channel. Okay, you go off here. This area right here, you bottomed the other day. That's a raised floor, okay? The implication is that the next resistance is going to be higher than the resistance you came off of. Now, in this case, the resistance you came off of was here, all right? We've actually already stopped there, but you should expect it to continue beyond that point. So if you were to continue beyond this point, your next resistance is probably here, 57 and change. You'd be then looking for support probably on this line, all right? But ultimately, what you have is a bullish inverse head and shoulders pattern. Shoulder, head, shoulder, complex. And if you cross up through this high, you have a double bottom, and the target on that is actually 65.60. I don't know if it gets up there because the channel's 64.50 or so, okay? So that's where I'd be paying attention to. All right. All right. So we are out of time. And I hope that helps. And everyone, thanks for attending. Have a great rest of your week. And I'm going to get this up and published and start working on the update for tonight. Okay. Eileen, you have a great rest of your week too. All right. I'll talk to you guys later. Bye.